Hey there, folks. Happy Saturday to you. Hope you're having a fantastic weekend. Coming at you live with this week's market wrap, and then I'll be back shortly with stocks to watch for next week. So let's go through real quick the indexes and just kind of take a look at what happened. One of the first things that I want to do, though, is I want to bring up the fact that, if you're just tuning into the blog on the weekends and you're not reading the blog throughout the week, you're missing out on some things. And I think it's really important for me to emphasize this because as the markets change, my sentiment is going to change. And that happened this week. So, last weekend we spoke about how I felt as though if we got a quarter point interest rate hike attached with a extremely dovish um, statement that could set us up for a Santa Claus rally. So let's define Santa Claus rally. Santa Claus rally typically happens the last week of December through the first week of January. Now, last week played out kind of how I thought it was going to play out because if you recall, I talked about the fact that there was a tremendous amount of negativity out in the marketplace on Friday, and that it could carry over into Monday, but I felt as though we could get a nice little pop off of a dovish Fed statement attached to a quarter point increase. So, what exactly happened? Well, we opened up, this is the NASDAQ, we opened up weak, and we had a nice little reversal. Basically, what we did is we came down to this trend line right here, we kissed it, and had a nice little bounce. Following day, we had a gap up day and closed in the lower portion of this candle, coming into the Fed day, right? Fed day, we come in, we get the statement, and we had a nice little rally off of the statement and the increase. Now, on Thursday, pre-market, I'm doing my blog, and we are green pre-market. And it looked as though we may just continue ripping off of what happened with the Fed. And in my blog, I wrote, look, we've had a 3-day run into the Fed announcement. So I wouldn't be shocked if we saw a pullback over the next couple of days, which is exactly what happened, right? So we opened up higher, and then we just faded for the rest of the day. And then we were coming into options, a quadruple witching options expiration on Friday, a Russell rebalancing, S&P rebalancing, and that weakness carried over, okay, throughout the day. And we closed nearly at the low of the day on Friday, or maybe we closed right at the low of the day on Friday, on some pretty big volume, which always happens when you have options expiration. Oil was a huge drag on the index as it went lower. You had Goldman Sachs come out and reiterate their, $20 price target per barrel. I saw reports on different shows that it could take another year for the energy sector to recover. You had the high yield fear and the contagion that could potentially be happening from the high yield market. Um, there was a lot of different things going on. We were right back to a tremendous amount of bearish sentiment is huge right now. But I'm going to show you a couple of indicators that are keeping me, at least for now, thinking that we may be setting up still for that nice Santa Claus rally. So let's just take a look at a few of the other indexes. You know, the Dow Jones Industrial Average, uh, basically coming down to this line of support. Looks like it may break through. We could come down and test 16,642, somewhere in that range. You know, one of the shows that I watched, I don't know if it was Options Actions or Fast Money, which one, but one of them was saying we could see another 1,000-point decline come Monday because it's going to be a it's going to be a lighter volume week, right? Because we're coming up into the holiday, and we could see some real volatility. That could potentially happen on Monday, right? And then you're going to see volume dry up as we head into Thursday, a shortened trading day. So, you know, Dow Jones Industrial Average not looking real good. Let's take a look at the S&P 500 real quick. Right, basically coming down and testing that 2,000, that psychological number. Right, if we crack below 2,000, we could see some increased selling pressure. Could we come back down and test this 1,900 area? Absolutely, it's very possible. Let's take a look at the fly in the ointment that we talked about last week. We talked about the transportation sector, and it continues to be a fly in the ointment. You know, we had a trucking company, I think it was Knight Transportation, to come out, guided down. You know, that hit the transportation sector. Let's look at the shipping sector. TK Shipping came out and they had some negative stuff, and we had a sell-off in the shippers. You know, if you look at that IYT the week before, we had the rail companies which issued some negative guidance. And there is a lot of negativity out there. I'm not going to say that there isn't. The question is whether or not that stuff is already priced in. That's what I have to ask myself. You know, oil hitting new lows. Like I said, Goldman Sachs coming out with a $20 a barrel, reiterating that $20 a barrel target. Energy breaking to new lows, right? The whole sector breaking to new lows. And you know, I have to ask myself, how much longer is OPEC going to allow this to happen? I mean, is it just us that they want to hurt? I mean, because they're not just hurting us, they're hurting the entire globe, right? I mean, you're hurting Venezuela, you're hurting Brazil, you're hurting Mexico. You're not just hurting the U.S. I mean, and they're hurting themselves, I would think. You know, they're not making as much money, and all they have to do is cut production. I just wonder how much longer they're going to be able to keep this up. Maybe they do keep it up throughout 2016 into 2017, or maybe 2018. I don't know. Maybe they want to put everybody out of business. But to me, it's getting overdone again. Financials. So interesting move in financials, right? We ran up into the Fed meeting and then we sold off, right? And look, how many banks came out and immediately announced they were raising their interest rate, you know, to 3.5%. A lot of them, and that would be, you would think, would be good for the banks because they're going to make more money. However, the banks sold off. Why? Well, it was because of that dovish statement that the Fed attached. This is going to be a very gradual, slow rate increase, unlike the ones we've had in the past. So it's going to be very interesting to see what happens as we go into the new year. So there is a tremendous amount of weakness. One thing let's see, I want to talk about the IWM. Did I already talk about it? Well, I don't know if I did, but I'm going to go ahead and let's take a look at the IWM real quick. It has been another area of weakness, right? Last week, I said that I felt as though maybe we come down and close this gap right here. And, you know, if we got a good Fed statement, we would get a bounce. We actually bounced before the Fed statement, right? We came and closed the gap. We bounced up, basically right into this trend line, found some resistance and been pulling back. Now it looks as though we're going to retest this 134 area. If that breaks down, we're likely coming down to test this 107. I thought the one sector that I've been talking about for the last several weeks, which is the IBB, I thought that this one held up fairly well on Thursday and Friday, right? And this is a sector that I've said we need to have this sector kind of break this trend line with some conviction, right? So that it can take the market to new highs. And for the most part, it kind of held up fairly decent on Thursday and Friday in comparison to the overall markets. SMH had a little bit of a pullback. Basically, looks like it wants to test the 200-day moving average right around 52 or so. Social had a little bit of a pullback. Looks like it may come back and test this trend line. This was interesting, though. TAN, the solar sector, had a nice little break on last week, right? And part of that was because of the new bill that was signed into law through Congress. So solar had a nice little pop. And look, we could come back down here and fill this gap that has been created. But it has certainly broken this downtrend. It'll be interesting to see how solars act. Going through my scans, I noticed that gold was actually the miners. There were several miners out there that had interesting looking charts. And what's interesting about that is the fact that with the Fed raising the rates, you would think that that would be the killer of gold, right? Because it indicates that maybe the economy is a little stronger. But we had a little bounce in gold on Friday, which I thought was kind of interesting. So one of the things that we've talked about is the narrow band of stocks that have been leading the markets or holding the markets up. Let's say that have been supporting the markets, right? We're talking about the FANG, Facebook, Google, Netflix, and what was the other one? Apple? Or no, Amazon. Okay. So one of the things that I was really focused on this week, and I'm going to show it to you right now. So this week, we saw some real weakness in Apple. We saw some weakness in Disney, and we talked about that last week. Matter of fact, let me bring Disney up real quick right now. We talked about Disney, and I shared with you guys that one of the best investments I have ever made was in Marvel Enterprises when they had just came out of bankruptcy, and I learned an awful lot about movie companies when they're getting ready for a big release and how the stock reacts. And one of the things that used to happen with Marvel is it would sell off into a big event. And I mentioned last week that we could see the same type of action in Disney. And certainly we did see that, right? We saw some weakness. And Disney, if this carries over, if the market weakness carries over into Monday, and we see this carry over into Disney, regardless of how big the box office is, right? Because everyone's saying that the box office is already priced into the stock. Well, that may be true, but one of the things I also know is that it's not just the box office. It's the intellectual property. It is the royalties that they collect from, the fast food places that are using Star Wars in their commercials, the cereal boxes in the aisle that have Star Wars on the front of their cereal box, the costumes, the toys. It's all this other stuff that goes along with a successful movie. And those things are going to be tremendous for Disney. So do I think the movie is priced in? I don't. I don't think the movie is priced in. I think what is going to happen, look, if we get a really hard sell-off in Disney to this 100 area, I would look to maybe start building a long-term position. If it comes down to 95, I'm doubling up. Okay, this is a franchise that I do believe that you want to own for the long term. I know they've got some issues with ESPN and so forth and so on, but you know what? This is a franchise that is going to be more valuable in the future. You may have some pain near term, but I have areas of reference where I would look to be adding Disney if it really cratered down to 67 bucks. I mean, I'm not going to sell my shares if I bought them at 95. Uh, I'm just going to add to it. And I know that that is a bad strategy for, short-term day traders or whatever, but I have a very balanced approach to investing and trading. I invest, I trade, I swing, I do it all. And this is one that I would want to own. If I got a gap filled back down here to 95 again, or it came back down to 90 bucks, I'm buying Disney. So anyway, enough about that. Let me go back to the thing that I really look. We've had a narrow band of stocks that have been holding or supporting the market, but I'm going to show you what I was looking at. And look, this could be either really exciting or it could be really, really scary. What I'm about to show you here. So this is the T2107, and what this is the all of the stocks on the New York Stock Exchange. Okay, and the percentage of stocks that are above their 200-day moving average. And so what this is basically telling us is that 23% of the stocks are above their 200-day moving average. Now, what is so interesting to me about this particular indicator? If we look at this 1485 area right here, where we basically came down, tested it, had a bounce, came back down, tested it, bounced off it again, and it looks as though we may be heading back in that direction. Okay, so this is the daily. Let's take a look. Let's just back this out a little bit further to the weekly, and you can see over the years, this area has held as support several times. Okay? Now, when you do break this 1485 area, look, it can get extreme. So what will happen is you're going to see, if you break this area, you're going to see volatility pick up significantly because you can have some pretty tremendous sell-offs, some panic in the market when we break through. But, look, back here in 2011, keep in mind, this candle is 1 week, right? And we basically broke through it and came right back above it within the week. And then we came back down and tested again and bounced off and had one heck of a run right here. And then you've got basically 2008. We came down and we tested it and bounced a couple of times, had a nice little rally, wound up breaking through towards the end of 2008. And of course, that's when you had financial Armageddon. You had Lehman Brothers and Bear Stearns disappear, and this was not a very good time, right? So we could be setting up, I suppose, for another type of event like that. If that happens, things could get really scary and the market could get pounded. I'm just kind of leaning towards the thought that this is where we may get a nice bounce, and that's why I'm standing by my Santa Claus rally theory. So one other thing I want to show you is, let's just back this out a little bit further to the monthly. And what caught my eye is this right here. Basically, since the last quarter of 2014, we've had a lot of selling, right? It's been a stealth bear market, right? And if you think about what we've done in the market over the last year, we really didn't go anywhere for an entire year. We were consolidating, right? And underneath it all, minus the narrow band of stocks that have been leading the market, we've been selling off. I mean, we've got companies that are down 30, 20, 30, 40% already, okay? And we've had that narrow band of stocks that has been holding up the market. So I guess the question becomes, are the greater percentage of companies that have already had tremendous sell-offs, are those going to catch up to the stocks that have been leading the market? Or are the stocks that have been leading the market going to catch up to the stocks that are down, 10, 20, 30, 40%? So that's that's the 200-day. Let's take a look at the T2108. And you guys have seen me use this before, and I don't want to really go to the monthly because this one's a lot more wild because of the fact that it is the 40-day moving average, right? So let's go to the daily on the on the T2108. And we're basically getting down to this, we came down and tested this 1344 area. We bounced off of it. Let's back it out a little bit. Let's take a look at the weekly. Look at how many times this 1344 area has held up as support. Okay? Now, we do break through. I mean, we can get down into the single digits, but the way that this indicator is supposedly supposed to work is that when it gets below 20, this is the time that you want to be covering up your shorts. Okay? This is not the time that you want to start adding to your shorts. So, knowing this is what leads me to think that, maybe we're going to set up perfectly for that end of year Santa Claus rally. Look, things could completely implode. Maybe we've got another Lehman Brothers event on the horizon. Maybe that's going to happen in the high yield sector. Either way, like I said, this could be a very exciting area. This could be a very scary area. I mean, if we break down with some conviction, you're going to see a lot of fear in the marketplace. Keep an eye on that TIVX. Keep an eye on UVXY, the VIX. We'll see, right? I think we could have a volatile week coming up. Like I said, whatever happens on Monday, my sentiment could change. Please follow the blog daily. I don't, try to drag it out. I try to get right straight to the point. But this is a very, very crucial spot that we are sitting in. And it's going to be interesting to see where we go as we head into the end of the year. Okay, that's it, folks. That is my market wrap. I will be back shortly with some stocks to watch for next week. And I'll see you in a few.